every major bubble in history and the first crash. Now, I'm just saying the first crash, when the bubble finally gives, okay, like in 1929, or in 2000, in May of 2000, when it first crashed. The first crash averages 46% in just 2.6 months. Now, when a major bubble of this magnitude, like 1929 or 2000 or now, crashes, the whole crash tends to be about 80 to 90%. I'm saying stocks in general in this crash will be closer to the 29 to 32 crash. I'm estimating 87% for the S&P 500 and maybe slightly higher for the NASDAQ. So this is not something to sit through and just rebalance, as financial advisors say. You have to get out of the way of this, and then we will have the buy opportunity in investments of a lifetime in around late 2023 or so. I predicted the 2007 top 20 years before it happened. That was a natural boom driven by real consumers and investors. You've got governments fighting this crash, and so it is impossible to predict exactly when it's happening. What we've seen one index from the corporate bonds to then the small caps and Bitcoin, and then the NASDAQ. We see the succession of peaks down into narrower, more large cap. That's a classic long-term top. That's why I'm saying it's likely now, but there is no way to tell this until it happens. But I am warning people with unbelievable analysis in history of every bubble, major bubble in the last 150 years, that first crash will be 40 to 55% so fast you will not see it. So if you wait to see if I'm right and take that risk, you're going to be hit very, very hard. And history is very clear about that. No exceptions to that. This is the hardest damn thing a person can possibly do, is fight a bubble, which every central bank is so committed to keep going that they will print $5 trillion. Yeah, $5 trillion been printed just since COVID by the Federal Reserve. That's what I'm fighting. But I'm telling you, if you think you can keep printing exponentially more money and keep a bubble going forever, then you have not studied history and you're the insane one. What are they doing right now? They're stepping back. They're stepping back cautiously. Now, once you start stepping back, if you turn around and instantly goose it again, you're going to look like you're idiots and you're crazy. So they're already compromising themselves. Why? Because they keep pushing the bubble bigger, and the economy, you can only squeeze so much juice out of a lemon. The economy is not responding. I mean, if $5 trillion we should be growing at 20% a year. So you get less and less as this escalates until basically the central banks lose the war. There is no way they win this war, because next time, if they printed $5 trillion since COVID, next time when we crash, they're gonna have to print $10 trillion. Where does it get so ridiculous that nobody has any faith in anymore? And that's what makes it hard to predict. I'm saying I think we're there. By the way, the demographic trends, which I uniquely created that system, which caused the greatest boom in history in 2007, have been down from 2008 and do not bottom in demographic trends until late 2023. The 2000 top, the first tech bubble, there was no trigger, there was no recession, no big slowdown in the economy. Stocks just got so extremely up. And then what happened was the internet stocks, which were babies back then, came on top of the NASDAQ stocks, and they were part of the NASDAQ, and they really triggered the bubble because they threw the NASDAQ straight up. Well, now the baby stocks are the cryptos, and they're not in the NASDAQ, okay? But the cryptos are doing the same thing the internet stocks did in 99, early 2000. And so it just goes until it gets so extreme that the smart money starts selling. It's the dumb money, I hate to say it, the everyday person that piles in the last 6 to 12 months, just like in 99. And when the smart money starts selling, it doesn't take much for them because all these people are overcommitted, and then they get scared because they're not sophisticated investors. So all it takes is to get the markets to go down, I think, a little over 20%, and people will start panicking. I love Ray Dalio. He's making a huge mistake here. He has not studied these bubble crashes like I have all throughout history. Cash is good. Whatever you have, you pull your money out of the markets at the highest I'm telling you, the highest you're going to see stocks and real estate, maybe for the rest of your lifetime, okay? You're pulling it out at the top, and then everything goes down, and you rebuy with that cash. That's a great strategy. This is the reality. Greatest bubble in history, crashed. Governments pushed it up totally artificially more than any time in history. This entire rally since 2009 has been 100% artificial. And now you got to crash and shake out all that nonsense, and then you can reinvest again. Now, if you want to sit and wait, sit and wait. I'm just telling you the reality of what history says. If I'm right, and the biggest bubble in history is about to burst. Crypto is the next wave of technology. And let me give you one sentence for that because it's complex. But it's the digitization, digitization of all financial assets and money in the world. I think Bitcoin could become that new standard. We'll have to see. But the crypto is in its infancy. And just like the internet was in its infancy and now has bubbled into 2021, I see crypto being at its best at about 2037 to 2040. Bitcoin and Ethereum and some of the strongest are going to come out of this on the other side. And I'll tell you, if I'm right and we have the biggest crash in our lifetimes into late 2023, most of it hitting in 2022, and again, that's my forecast, the first thing I'd be buying is crypto, the strongest crypto companies, things like Bitcoin and Ethereum on the other side, Cardano, Solana, whichever ones prove to survive, but most of these things are fly-by-night companies and they're going to disappear.